Hi, I'm Amanda Gant. I'm an estate investor and licensed mortgage loan officer. So today I want to talk about how to decide what kind of loan you want. So one of the biggest decision points in what kind of loan you want to get is to think about how much down payment you have saved. And you can do that by thinking about the approximate budget of the home or property that you want to buy and deciding how much down payment you have. This is very easy to do, but there are many different levels. And at the different levels, you can experience different benefits and different options. For instance, you'll have the most optionality if you have 20% or more saved. At 20% or more, you will not have to pay mortgage insurance. And you can choose between getting into a primary home, that means buying a home that you are going to live in, or having an investment property, which is a place that you can buy and right away start renting it out and turning that investment into a recurring income every month. But if you've done the numbers and you don't have what 20% looks like in your market where you want to purchase, then you want to start looking at primary home. So buying a place that you can live in. So there are many different amounts that you can put down for that. But the next level down is about 5%. So there's so many different loan options that you can get at 5%. You will have to pay mortgage insurance premium, but that's fine. And this kind of calculation is shown for you in those Redfin or Zillow calculators. At 5%, your offer is actually very competitive as well. But if you're looking at that and you don't have 5%, or perhaps you do have 5%, but you'd still rather put less down so that you maybe have more savings after you close, there are a few other options. One is an FHA loan, that's Federal Housing Administration loan. So it has nothing to do with first-time home buyers. You can already have a property or you have bought one before. The thing is, you will have to live there. And those are 3.5%, and they come with additional inspection requirements so that often can make your offer less competitive if it's a very competitive market. But as we know, the market has been softening. So these actually still might be a great option for you to have a lower down payment. And they also allow you to use this loan towards multifamily homes much easier with much lower percent down than a lot of other loan options for multifamily homes. So this is a great option if you want to buy a duplex, a triplex, or a quadruplex, which means you live in one of them and can rent out the other two, three, or four right away and use that projected rental income to help you qualify for a more expensive loan. This is actually the kind of loan and the kind of setup I did on my second property purchase. I purchased a duplex, lived in it, had a roommate, and then had the rent from the upstairs help me qualify for that larger loan. But if you want to put even less down, right now there are a few lenders, including one that we work with at Momentum Mortgage Group, that is offering 1% down loans. So this is great. You have to definitely meet an income requirement, as in you can't be making more than 80% of your area median income. So you can look up 80% AMI for my county, look it up online and see what it is. And if you make less than that and you don't own a property or haven't owned a property in the past 3 years, you are on track to qualify for a 1% down loan. So at this point, you can really get a house for almost no money. And because the market is soft as well, you could consider asking the seller to put some money towards closing costs, meaning that you could really show up with 1% and turn your rent into a mortgage payment. So knowing how much you want to put down is really going to help you know the kind of loan you're going to get. And that's going to help you determine whether you're going to look for a primary home or whether you have the optionality to look for an investment property as well. But something that I like to put front and center for everybody who's going to get a primary home is, why not consider giving yourself the option to try and find something that has the potential to cash flow positively. So consider how much this home that you're going to live in could rent for a year or two or three. If you decide to move out and move on, consider being able to keep ownership of that and to take rent from a tenant in order to pay your mortgage, so that over those 30 years, you actually have equity for yourself and your family. And if it's cash flowing positive, that also can add to your income right now and during all of those 30 years that it takes you to pay off your home. So when I work with my clients, want to give them all of these options. I would love to talk to you about what you're thinking, what your income is, what your hopes are, what questions that you might have after seeing a video like this. because a lot of people might not understand or have thought about some of the different options. And knowing these options are what is going to make you be able to build that wealth over from the years to come. So really would love to partner with you on this and to have a conversation and see if we can find ways to help you turn your hard work into something that's really going to last for a lifetime. Thanks so much.